What's up, guys? And welcome to another episode of learning. So, in this video, I'll be sharing my knowledge on market weekly profile according to ICT. All right, and this idea is basically based on the concept of power of three. Yeah, power of three, sometimes called AMD, which is accumulation, manipulation, and distribution. So this concept basically evades you certain losses during certain times of the week, right? There are certain times of the week that you do not want to engage the market. All you want to do is just observe, wait for price to come to you and shoot during certain times of the week. And of course, within the time window that you expected or you're supposed to engage the market. So I made a short explanation during one of my live sessions last week, and I promised that I'll be making a comprehensive video on it. So yeah, we are. So without wasting much time, let's dive right into it. So you see on my chart where I mean these are hypothetical candles that we obviously they don't have weight. So you just quickly brought them out so I could use to explain the concept and we dive into the live charts. So I'm starting from here, the middle part here, where we have these three candles, we have this, and this. And like I earlier said, the idea is based on the concept of power of three. Power of three is essentially three moves expectation in the market. We have first one, which is usually when you just want to wait and do nothing. Accumulation phase, price is just doing nothing rather than just ranging and inducing buy stops and sell stops. So this is the accumulation phase, right? And for those of you who are very new to this idea, you may not be able to fully grasp this concept. So I'd advise that you go and watch a video on power of three before coming to watch this one for better comprehension. This is the accumulation phase where you really do not have anything going on. Yeah, this phase is the accumulation phase. So you just have candles going up and down and randomly without any significant move. Then after which you have the manipulation phase, which is where most people have been faked out, right? And induced to want to sell to the downside, and after which price would knock them out and go to the actual direction. Then after the expansion, sorry, after the manipulation, you have distribution, which is sometimes called expansion. Then price would most likely close around here. All right. So this idea basically is the idea of make weekly profile is based on this simple concept that I just explained here. So there are certain times of the day that you expect accumulation, and there are certain times of the day or there's a time of the day, or sometimes not just one day, sometimes it could be the following day. All right. So I would explain all of this concept as we proceed. So you expect manipulation to occur, yeah, that day on that day, then the subsequent days, there are certain expectations. So how do you take advantage of this move? Right. That is one of the most essential reasons why I'm making this video. Okay, so remember accumulation, manipulation, and distribution. So you only want to engage the market when it has fully manipulated, and you wait for a change in order flow, change in state of delivery, or just ensure that you are aligned with the market speedy array, and you have of course identify your drawn liquidity to the upside. So like I always point out, every concept has to be treated in context with the market's narrative. Okay, so you don't just want to take this concept in isolation and you know throw away the idea of what is the market saying, like what is the higher time frame narrative saying, what is it telling you at this point in time. Very, very essential. So I haven't um explained that. Let's just dive right into what we have. Yeah. So don't forget this idea, what I just explained. So this on my left here is for the bearish scenario, apparently. Oops. I think I might just have to deal with that. There's no need. So this on my left here is bearish scenario. So we have Monday's candle. Okay, consider these candles as daily candles, right? So this is Monday's candle, Tuesday, Wednesday, Thursday, Friday. And of course, Monday, Tuesday, Wednesday, Thursday, Friday. So you notice on my left here, we were bullish, right? Slightly bullish. Yeah, just like I said, these are just templates, right? These are hypothetical candles. They are not real candles. So Mondays are usually very manipulative. Sorry, consolidating. right? They are consolidating this. Mondays usually just range. You don't really get significant moves, except for some very rare occasions where we have price driven fundamentally. But most Mondays, just like last Monday, yesterday, was just a ranging day. Okay, so most Mondays would likely range. Then Tuesday, you get some slight expansion, and Wednesday, it does get a move. So most Mondays, you want to consider Mondays as your accumulation day. All right. And that simply means that you do not want to engage the market on Monday. So one of the reasons I do not trade on Monday is just because of this simple idea. I do not trade on Monday basically because of the fact that usually Monday accumulates, induces buy stops, sell stops, and because I don't really get so much significant moves on Mondays, I just stay on the side and observe what price would give, right? Where the next draw would um B, of course, I must have identified where the next draw would be. And I just want to wait for the willingness for price to want to push towards the side, to that side, either on Tuesday or on Wednesday. All right. But for Mondays, you don't want to trade on Mondays. Honestly speaking, if you want to follow the idea of market, this market weekly profile, then I would strongly advise that you stay away from the market on Mondays. At least Monday, um, London session, even New York session sometimes, yeah, can be very, very lethargic. So yeah, Monday, Tuesday, Wednesday, Thursday. So on Mondays you accumulate. On Tuesday you would most likely experience the manipulation. This is for a bullish scenario anyway. And if I have to take this, let me just take this one up here and bring this down here. And apparently we have this for a bearish scenario. So this is your distribution phase here. Then this will be your manipulation. So it means that once market opens here, once market opens here, sorry, once market opens, accumulates for a while, it will manipulate here to take out buy stops and eventually distribute and close somewhere around here. Okay, so this is for bearish scenario. I have to quickly convert that because I'm explaining the bearish scenario here. So this is Monday, Tuesday, right? Monday is your manipulation day, or sorry, accumulation day, ranging day. Yeah, as the case may be. Tuesday is your manipulation day. So most of the manipulations happen on either on Tuesday or Wednesday. Okay. And how do you take advantage of this expectation? Okay. And like I said, sometimes it happens on Tuesday, sometimes it happens on Wednesday. But you just want to position yourself for when it happens, because at the end of the day, you would um notice this unusual volume on these days, either on Tuesday or Wednesday. Okay. So when market wants to create eye of the day, so eye of the week rather, on Tuesday, you notice a significant volume towards the opposite direction, meaning price would create the eye and drop significantly on your H4 time frame or whatever. And of course, this candle will not close fully bullish. It will close with a wick. So that, in a way, would sense that we might want to just proceed to the downside for the rest of the week. Like on Wednesday, on Thursday, and Friday, will give you some kind of retracement. So if it does not happen on Tuesday, if you do not see that full retracement on Tuesday, then expect Wednesday to do the job. All right. So sometimes you have eye of the week formed on Wednesday, right? Or Tuesday. But most of the time it happens on Tuesday. So if it does not happen on Tuesday, anticipate Wednesday. It really happens on Thursdays. Okay. So if you don't have your eye of the week formed on Tuesday, Wednesday, then on Thursday, I do not usually uh, it is not going to, even if you want to sell, or even if it eventually sells, you're not going to have so much significant sell to the downside. You get, so expect eye of the week to happen on Tuesday or Wednesday. So if it does not happen on Tuesday, expect Wednesday. And of course, just like I explained for the idea of Tuesday forming eye of the week, expect that price would retrace and so not retrace, it would take out, of course, your previous high and tank with so much volume on your H4 time frame, and of course give you a change in state of delivery, close out on bullish reference points and start to respect your bearish reference point. Then on Thursday, you just want to continue to sell. So you don't want to expect Thursday's high to go above Wednesday. That is the idea. So when you're bearish for the week, when Wednesday has given you that confirmation as the high of the week, all right, you don't want to expect Thursday to go above it. If it goes above it, then you're wrong based on your idea. Maybe you did not identify your draw on liquidity properly on daily or weekly or something. Right? But if you have properly identified this draw on liquidity, like where market is likely to gravitate towards, on your weekly time frame, then this idea is something that works most of the time. Okay. So when Thursday sells, it feels to go above right where is this high? Then on Friday, you don't want to continue to sell on Friday. Okay. And if you want to sell, you should be very wary of the sales because Friday will most likely want to retreat back into the weekly range. Do you understand? So if Wednesday gives you high of the week, Friday is my yeah, so your Friday might actually want to sell, but it will not be that significant because there would always be a point where market will want to close back to the range. Because for every candle we have high. So we have the opening price, we have the high of the candle. Let me see if I can quickly use a tool to that. For every, let me use this one. For every candle, you have a high, right? You have the high. You have it. Um, okay, so we have, yeah, we have it. You have it low. We have the opening price, right? Opening price should be around here. Price will go up and come back down and close around here. Okay, so when this opens, that is your Monday to accumulate. When this opens, that is your Monday, accumulate, then to go up to manipulate on Tuesday and Wednesday, then expand on Wednesday, Thursday, then on Friday to go back up to close that candle. Okay, that is an ideal candle for you. And that is essentially what happens on the weekly candle as well. So these all 5 candles, they are embedded in just 1 week's candle. Very simple idea. So it's like this is the weekly candle right now. But each of the days would comprise, sorry, would establish whatever price story this weekly candle is telling me. I hope I'm making sense. So for the week, if you are bearish, you only want to sell either on Tuesday or Wednesday. That is the summary of what I'm saying right now. If you're bearish, you only want to sell on Wednesday or Thursday. Sorry, on Tuesday or Wednesday. And of course, conversely for buys. On Monday, you want to expect the price to accumulate, just like I mentioned earlier on. It must accumulate either on Tuesday or Wednesday. And if it doesn't happen on Tuesday, if the low of the week fails to form on Tuesday, then expect it to form on Thursday, on Wednesday. And when it forms on Wednesday, look for your change instead of delivery. Probably price closing above here or above here, and wait for retrace back into the range and buy to the upside. And once you buy on Friday, you don't want to continue to buy. Yeah. But then again, it has to do with context. Context is always very important. If you're seeing more momentum to the upside, and price is pointing towards the upside, if you probably see have more draw on the great time frame. You don't want to sell that market. It's just common sense, right? So that's why I always point out that context is very, very essential as far as market is concerned, not just concept. Context is as important as any other thing. Like I pointed out on X yesterday, I said if you take away context out of a strategy, then you're already 80% finished. That is the honest truth, right? So, boom, easy as that. And I'm going to be showing quite a number of examples on the chart right now. I think I have a few of them on GPUS. And I'm also expecting one to happen today, like this week on GU. Hopefully, we have that. I will explain exactly what I'm looking at. So remember, when you're bearish, expect high of the week on Tuesday and Wednesday, and sells on Thursday and maybe Friday too. And if you're bullish, expect low of the week on Tuesday or Wednesday. So on Monday, you don't want to engage the market. You're gambling when you engage the market on Monday. Honestly, except you don't trade this particular strategy. Yeah. But if you do, then you just want to submit to this idea. It's very easy, no complications. Your entry of code will be found within the London Q zone or New York Q zone. Those ones are just very, very basic. So these ones are the easiest to catch. But ensure that you know when price will most likely react or sorry, reverse for the week or continue to buy for the week or you know whatnot. So without wasting time, let's go to a live chat. So I think I have a few ones already identified here before. We have one currently happening. I don't know if that's going to happen, but I have an expectation currently. So this is I think a few weeks ago, and I outlined the week's candle. So this is a Monday price action. As you can see the accumulation happening on Monday. So tell me why you want to be engaging this market on any good day. Like if you're not a gambler, there's really nothing happening here. Nothing. So this is your accumulation day, right? And on Tuesday, see what the way price came down, manipulated below this low, and also took out, I think, last Friday's low. No, took it out around here. Boom. All right. Forming what? Potential low of the week. But it has not been validated until you have a change in state of delivery, which eventually happen here. So once you get a change in state of delivery on your H4 or H1 time frame, then for the rest of that week, except on Friday, you want to continue to buy. So on Tuesday, we have low of the week, and on Wednesday, see, this is Wednesday's low. Did not come near Tuesday's low. And like I said, if you're bullish for the week, you don't want to expect price to come below Wednesday's low. Or you want to just wait for your OTE entry, OTE opportunities like optimal trade entry opportunities you join the market and continue to buy. And of course, your eyes on what draw on liquidity on your higher time frame. You have some internal eyes here. Okay, that's very essential. You must have established your draw on liquidity. So this is Wednesday, right? And this is about Thursday, right? Thursday. And if you want to delineate your chart, right, to know the number of days, I use the New York open time 00. So just go in your chart. My time is UTC -5, daylight savings. Okay. But when it's not daylight savings, it's usually UTC -4. So you go to your charts, go on your charts 00 to 00. Yeah, New York open time 00 to 00. So you have 000 at 12 midnight, New York open time. So this is Friday's price action. I remember I said on Friday, you would most likely see price retrace back into the range. All right. So this is Tuesday, Wednesday, Thursday. See Friday's high end. Still price. See there was not really any significant buys on Friday. Very easy. Okay. So this also evades you certain losses. Meaning, even if your expectation is to continue to buy and you know that we're already on Friday, so it's already Friday. All right. It protects you from making some very, very avoidable mistakes because you understand that because you've bought from here on Tuesday. Tuesday gave us low, the week Wednesday bought, Thursday bought. Then on Friday you would really buy. All right. So all you want to do is you sit down, you look for a short sale or you just stay up the market. And if you're a swing trader, you probably have more draw on liquidity to your upside. And you probably just want to position for more entries on Monday because you know that once price retraces on Friday, it comes back to maybe discounted zone of the entire daily range and you want to continue to buy. Okay, but you don't want to add more buys on Fridays, except for some very rare occasions where you see the bullish tendencies, coming coming up without giving any form of sell expectation. Okay, so unless you have that, but anything aside that, on Fridays, you want to what? Ensure that you do not want to continue to buy. You just position yourself for a possible pullback, or you just stay on the side. All right. So in the case where you have Monday giving you low of the week, because sometimes it also happens where Monday just gives low of the week. When Monday gives you low of the week or Tuesday, on Friday again, you would have what we call a TGIF entry. And TGIF is just basically a sell retracement. So expect a TGIF entry where price gives low of the week either on Monday or Tuesday, not Wednesday. All right. So if low of the week is formed on Monday and on Monday or on Tuesday, expect thank God it's Friday set up on Friday. Yeah, most definitely on Friday to happen. Again, it's also in conference with the context of what market is saying. Okay, but that happens most of the time. Remember, only on Monday or Tuesday. But if it forms on either on Tuesday or Wednesday, you could also expect a TGI, but it really happens. Price just lethargically comes back into the range. Like it's usually very slow without any much volume in the market. We have a couple of them. I hope I'm able to find more examples. Let's see if we have one more here. Then I'll go to possibly another currency pair. So let's see what we have here. I'm looking for Monday's price action. Remember 00, this is Monday, right? This is Tuesday. This is Monday, right? This is Tuesday. This is Wednesday. Monday, Tuesday, Thursday, and right. Okay, this is Monday, right? Monday, Tuesday, Wednesday, Thursday, then you have Friday here. Friday here. So this is Monday, Tuesday, Wednesday, Thursday, Friday. Friday is 1, 2, 3, 4, 5. So this, can you see Monday actually give us eye of the week? Tuesday failed to go above eye of Friday's, sorry, Monday's eye apparently. And if you also go on 4 hours, you notice that we must have had to change the state of the devil on H4. So he gave us the bearish move right from Monday. Monday gave eye of the week. Tuesday did not go above Monday's eye. Wednesday did not go above Tuesday's eye. Thursday. So it means that on Friday, most definitely you have TGIF set up. That means that on Friday, you don't want to continue to sell on Friday. On Friday, wait for price to buy back into the range. Then the following week, you can continue your sales. And as you can see Friday is low. Okay, because you cannot buy and so you cannot sell and sell and sell and sell and sell for the rest for the entire week. Usually does not happen that way. Okay, so if you buy, if you sell from the early days of the week, then on Friday you most likely buy. If you buy from the early days of the week, on Friday you most likely sell. Just yeah, converse um price formation conversely. Okay, so this is very essential and keen as far as market will be concerned. So on currently, this is what I'm looking out for. Yeah, today we are in a new week. Today is Tuesday, and I like the fact that price has taken out this low. So this is Tuesday, right? And I'm expecting that today's price action will give us low of the week. So all I'm waiting for is a retraction towards the opposite direction. We had an XMT here, but it did not hold apparently. But I'm still waiting. Mm, So this is Monday's price action. This is on last week's Friday. The price has taken out Friday. Let me put this here. And do you see this? Okay, so this is Monday. See the price action on Monday. Who the I was going to say something else when me not. So who would want to engage this kind of market? Honestly, what happened? Especially for scalpers, of course. But this for me, nothing is happening here. As far as the higher time frame, move is concerned. So this is an accumulation for me, accumulation Monday. All right. So I'm expecting Tuesday to form a low of the week, right? Although we are still bullish anyway. Sorry, I said bullish. We're still bearish. Long term, we are bearish, but at least we want to trade back into the range before selling. Okay, I pointed out we have to trade back into this range. We have some internal range liquidity that we need to take. So if we want to be bullish for a while, the Tuesday should give us this. And even if we want to be bearish, Tuesday should also give us side of the week. I don't expect Monday to give us side of the week. I usually don't expect that to happen. But if it happens, it's fine, depending on what the XY says. So this is Monday price action. This is Tuesday. Okay, my expectation for today is that if we want to be bullish momentarily, then Tuesday should give us low of the week, right? We should from here go up on Tuesday. Then on Wednesday, we'll look for more buys. Then Thursday, more buys. Then on Friday, we can continue the sales to the downside. Easy. Same thing I'm expecting on Euro USD. Same thing I'm expecting on Euro USD, honestly. So let's see. I think we have a divergence on this currently. Like we have a divergence. Well, that is not why I'm here anyway. Looks like we have a divergence, but that's not why I'm here. So Monday's price action, pretty much the same thing we will be have on EU, right? This is Monday. Nothing significant happened here. Nothing significant happened here. This is Monday. All right. Except for cases where you have divergence, simply divergence. So if this gives us something like this, which is fine, but if it doesn't, and GU gives us, then we have divergence. That is context. You get that's why I always hammer on the idea of context. If you from here buys up because G because GBP USD already has taken its low, it could mean that we have divergence already, bullish divergence, meaning that Euro USD does not necessarily have to come back down before we continue the buying, because this is probably showing a kind of strength. Let me check the XY. Let's see what's going on the XY. So DXY has not taken out this I2 anyway. So this is showing weakness. And GBP USD already took out this low. So for me, we could see this as a stop point on this previous move. So everything is still aligning for now. There's no need to engage in markets right now, of course, because there's no confirmation here. So yeah, see this as accumulation. Yeah, possibly come down. If it doesn't come down, it's fine. But if you're saying us to buy up back into the range, to take out this internal liquidity we have here on H4. This one here was highlighted from the H4 time frame. And boom, easy. So I think we have a couple of examples here too. Yeah. Let me see if I can find one more example here based on the idea of market increase profile. I'll probably round up from there. So this is okay, let's see here. Monday should be around there. Monday 000. Then Monday. There's some weeks, yeah, you don't get TGI. Of course, nothing works every time in Forex. So that's why sometimes Forex can be very difficult. So context is what makes us, you know, context is what makes us prone to certain errors in the market because human dynamics can be very crazy. So many factors can never make you be 100% sure, a winner in the market. So this is Monday's price action, right? No significant move. And on Tuesday, we have this. This is Monday's eye, right? Boom. See Tuesday's eye. This is Tuesday's eye. ISI on Tuesday, right? This is the eye here. This is Monday's eye. Can you see that Tuesday's eye is a little bit above Monday's eye? This is Tuesday's eye. And the moment price gave change instead of delivery around here, see when this eye did not go above it. So that confirms what? That Tuesday is our eye of the week. Okay, so if we were bearish for that week, I don't want to see price go above Tuesday's eye. I don't want to see price go above Wednesday's eye. For the rest of that week, you just want to sell. And on Friday, remember, if you don't get your TGI, if you just want to, if you don't want get what's it called? The solid retracement back. You don't want to do anything. Just stay on the side. But you don't want to buy as well. What am I saying? You don't want to sell as well. Okay? You don't want to sell because Friday will most likely retrace. And if it doesn't retrace, keeps on selling to the downside, it's probably because you still have more intents to the downside to take. Okay, but the idea is the times of the day that of the week you want to engage in market. Yeah, either on Tuesday or Wednesday. Okay. So ensure that you position yourself for whatever happens on Tuesday or on Wednesday. So if you did not find your entry on Tuesday, Wednesday is the perfect time to also find the entry. If you have a change to delivery around there, you can find an entry around there. You also find an entry around there. And boom. We have many examples on of this stuff. You can just go on your chart and find them. Like I always say, you don't take my words for it. Ensure that you go on your chart and find them for yourself. Master concepts. You do not learn by watching, you learn by practicing. This is the only way you can solidify this idea in your head. So that's what I thought to share, and I hope this video has been very insightful, educative, and very, very, very exposing to certain gray areas in your trading career. If you enjoy this video, I'd like you to like, comment, subscribe, and sure you also share with everyone that needs to see this. And I have a couple of other contents that I'll be dropping in the coming days, so to ensure to turn on post notifications so that you don't miss out when it drops. So until then, I would see you on the next one. Thank you and enjoy the rest of your day.